Good afternoon, students. Today we are going to start with the second method, that is written down value method. Yesterday we have already done two sums. Okay, so we'll continue with the same method, that is known as written down value method. So here, illustration 10 of your book, it is telling you Rohini Cement Limited, it has purchased on 1st April a plant. Yesterday we have done this sum. So today we will do illustration 11. Okay. Good afternoon, Manjeet, Deepika, and Jaswinder. Okay. So on 1st April, open illustration 11 of your book. On 1st April 2012, Sonu Limited has purchased a machinery for 3,90,000, in which it has spent 5,000 for carriage, 2,000 for brokerage of the middleman, and 2,500 for installation, and 500 for iron pad. So all these expenses, including carriage, brokerage, these all will be included in the cost of the machine. So you know it, how you are going to write. So this is 5,000 plus 2,000, 7,000. 7,000 plus 2,900 is 9,500, and 500 is 10,000. So the cost price of the machine will be 3,90,000 plus 10,000, that is 4 lakhs. Okay. So let's start the sum. So machinery account to bank 3,90,000, and all those expenses you are going to add together and write to bank. Okay, 5,000, 2,000, 2,500 and 500. So together it comes to 10,000. Okay, so it is 4 lakh. Okay, next it is by depreciation. Okay, so by depreciation is what? How much you are going to calculate? Depreciation will be 10%. Okay, so 10%. 10% written down value method. Okay, so depreciation is 10% written down value method. So here, how you are going to calculate on 4 lakhs. Okay, so on 4 lakhs, how much you will calculate? 10%. So 10% of 4 lakhs is 40,000. So what you are going to write? By depreciation, it will be 40,000. So from 4 lakhs, you are going to subtract 40,000. So it will come to 3,60,000. Okay. So this is the closing balance. Yesterday only I told you. So the closing balance will become the opening balance of the next year. March 31st. So it will be 1st April 2013. To balance BD 3,60,000. Done. On that same year, again you are purchasing. Okay, 2013. 1st November 2013, another machine is being purchased for 1,000, and rupees 20,000 is being spent on its overhauling. Okay. So to bank 1 lakh, and to bank overhauling it is 20,000. So together the cost price of the machine is 1,20,000. Okay. And on which date you are purchasing? You are purchasing it on 1st November. So November, December, January, February, March, 5 months depreciation you have to calculate on the second machine that you have purchased. Okay. So first machine will give you a depreciation of 3,60,000 into 10%, that will be 36,000. Okay. And this is, what is the cost price of the machine? Second machine is 1,20,000. Okay. So 1,20,000 into 10% you will do, and for 5 months, so it will be 5 by 12. So your calculation will come to 5,000. Okay, on the second machine. So together, if you add both the depreciation of machine 1 and machine 2, it comes to 41,000. Done. Next, how you are going to calculate this balancing figure? From 3,60,000 you subtract 36,000. Okay, so you will get 3,24,000, and from 1,20,000 you subtract 5,000, so it will get 1,15,000. Okay, so it is 4,39,000. Okay, so here see what is happening. This closing balance of this particular year 2014, next on 1st April 2014 it is going to become the opening balance. Okay, so to balance BD it is how much? 3,24,000 and 1,15,000. So 3,24,000 and 1,15,000 is 4,39,000. Okay, so next in this year only 2014, what is being done? They are selling the machinery. Okay, so on 30th September 2014, the machinery purchased in 2012 was sold at a loss. They are telling it is being sold at a loss of 1,27,800. Okay, so what was the cost of the machine? The cost of the machine was 3,24,000, and that machine is being sold at a loss. They are telling you how much? 1,27,800. Okay, so this, they have told you this in every sum we are calculating this loss, but here they have disclosed you the loss, how much loss it is incurring. Okay, so 1,27,800 is the loss on the machine. Now you know that the machine is sold in which month? On 30th September. That means April, May, June, July, August, September. 6 months depreciation that machine, particular machine is undergoing. Whoever it is, gaming king, please change your name. Give your proper name in your, as it is in the school, otherwise we are going to remove you from the class. So by depreciation 6 months. Okay. By depreciation, so it is by depreciation account for 6 months you are going to calculate 3,24,000 into 10% you will calculate, and for how many months? 6 months. So it will come to 16,200. Okay, now how you are going to calculate? With what was the selling price of the machine? How you will calculate? From 3,24,000 you are going to subtract the loss as well as this depreciation, so you will get 1,80,000. This is how you calculate. Okay, so here see they have given you, all of you look at the selling price of the machine. Okay, how is the sum different? In the previous sum you have calculated the loss on the machine. Okay, and in this particular sum they have given you the loss. You are going to find out at what price you have sold the machine. Okay, so balance is given. What is the balance of that particular machinery is 3,24,000. Okay, on the year of sale. So 3,24,000 you will write. Now depreciation for 6 months we have calculated, that is 16,200. Okay, so subtract that depreciation, so you get 3,07,800. Okay, now what is the loss that you have incurred on that machine? 1,27,800. So subtract that loss also, 1,27,800. So here you are left with the selling price of the machine, that is 1,80,000. So done. So this is 1,80,000. This is the selling price of the machine. Next, what you are going to do? Final depreciation. Final depreciation means the second machine that we have bought. Okay, that is, what is the cost price of the machine? 1,15,000. On that you are going to calculate a depreciation of 1 year, so it will be 11,500. Okay, and what will be the machine's figure after depreciation? When you subtract 1,15,000 minus 11,500 is 1,03,500. Okay, so the first machine which is bought for 4 lakh rupees is sold at a loss. Okay, and what is the selling price of the machine we have calculated? It is 1,80,000. Okay, and the second machine which is bought, that has been brought for a balance. Second machine is having a depreciation and the balance is 1,03,500. Okay, so the sum is ended over here. So this is the difference between the first sum and the second sum. All those who are attending class, only 3 of you are there. Please write yes ma'am. Okay, present ma'am. Give your attendance. Okay. Now we are going to do the last sum. Okay. So illustration 12. That is, this is the last sum. Okay. See this sum, it is little different. Okay. So on 1st January 2015, Jaipur Transport Company, it has purchased a truck for how much? For 4 lakh rupees. Okay. And on 1st July 2016, this truck was involved in an accident and it was completely destroyed, and 3 lakh rupees was received from the insurance company in full settlement. You understand the meaning of full settlement? This is the amount which you have recovered due to the loss which has happened. Okay, and on that same date another truck was purchased by the company for how much rupees? 5 lakh, and the company is writing off 20% depreciation. Okay, 20%. See, the depreciation rate is 20% over here. And on which method? Written down value method. So they have told you to show truck account for 3 years. Okay. Okay. So let's proceed with the sum. Today we will finish this second method, okay? I hope most of you are following, those who are attending the class. And another one method is left, that is provision for depreciation, okay? So that we are going to do tomorrow, okay? So truck account, okay, we have done. What is the cost price of the truck? It is brought for 4 lakh rupees. So January 1, 2015 to bank it is 4 lakh, okay? And on March 31st, you are calculating the depreciation. Depreciation will be for how many months? Can you tell me? It is from January. So January, February, March, that means depreciation will be only for 3 months, okay? So what is the rate? Rate is 20%, 20% on 4 lakhs for 3 months. That is 4 lakh into 20 by 100 into 3 by 12. Okay, good. So it's coming to how much? 20,000. So this is the first depreciation. Now by balance CD, how much is the balance? From 4 lakh you subtract 20,000, so you are getting 3 lakh 80,000. Good. Next, this closing balance, it becomes the opening balance. So it will be 2 balance BD 3 lakh 80,000. So 2015 April 1, this is the opening balance. Again on that you are going to calculate depreciation for whole year. So it will be 3 lakh 80,000 into, yes, for 3 months. So it's going to be 3 lakh 80,000 into how many? For the whole year. So into 20%. So 20% means 76,000. So 3 lakh 80,000 minus 76,000 is 3 lakh 4,000. Okay. So this is the balancing figure. Now this closing balance, it becomes the opening balance, you know. So 31st March 2016 is the closing balance, and on 1st April 2016 is going to be the opening balance. Okay. So 3 lakh 4,000, it is the opening balance. Now every sum what you are seeing, that the truck is being sold, okay? Here nothing is being sold. There is what? The truck is not being sold. The truck has been what? It has met an accident, okay? And in that accident, the insurance company, you have done this kind of journal where insurance claim you are getting. So the insurance company, how much money it is giving? Only 3 lakh rupees, okay? So 3 lakh rupees when the insurance company is giving, on that, which day? It is on 1st July. So 1st July means how many months? April, May, June. 3 months depreciation on that truck you are going to calculate. So by depreciation, 20% on 3 lakh 4,000 for how many months? For 3 months. So it's going to be 15,200. Done. Now, so what is happening? You are seeing. So you are getting on that truck 3 lakh. Okay, so how we are going to find out what is the, on that particular truck, what was the price of the truck? The price of the truck on the day of the accident was 3 lakh 4,000, and you have already got from the insurance company how much? 3 lakh rupees. Okay, so 3 lakh rupees, and how much depreciation you have already deducted? 15,200 minus what is the price of the truck? 3 lakh 4,000. So you are gaining, in this transaction how much? 11,200. Are you seeing, children? In this particular sum, all the sums that you have done so far, there has been a loss in the transaction. But in this particular transaction, there was an accident. The entire truck was destroyed. But the insurance company has given you that 4 lakh rupees was the price of the truck. The insurance company has given you in full settlement 3 lakh. So after getting 3 lakh also, you are not running at a loss. How much profit you are getting? 3 lakh is the insurance claim, and 15,200 is the depreciation. These two figures when you add and you subtract the opening balance of that particular truck, you are getting 11,200. So this is the profit which you are earning in this transaction, okay? And on that particular date only, on July 1, you are purchasing, see it is told that you are purchasing one new what? Machine for 5 lakhs. Okay, so on July 1. So on July 1 when you are purchasing, so you are going to calculate depreciation. April, May, June, 3 months are going. So on this particular truck, how many months depreciation you will calculate? How many months depreciation you are going to calculate? It's going to be 9 months. Okay, So by depreciation on 20% on 5 lakhs for 9 months, it will be how much? 75,000. Okay. So by balance CD, how you will do now? From 5 lakhs, you subtract 75,000, you are getting 4 lakh 25,000. Okay. So it is the closing balance of that particular truck which you have bought already. So now, so by balance CD, it is 4 lakh 25,000. So this is the closing balance. So the truck already you have bought, that is already an accident and insurance company has given claim, and so on that particular transaction you have benefited, you have got a gain of 11,200, and the second truck which you have purchased, after you have met depreciation, you are left with what? You are left with 4,000, 4,25,000 balance. Okay, so we are ended this sum. So tomorrow we are going to start a new type that is left tomorrow. Okay, that will be, provision for depreciation. Okay, methods of recording depreciation. This is the second method and first method. This method you are going to start tomorrow. Okay, methods of recording depreciation. First method is by charging to asset account, and the second method is by creating a provision for depreciation account. This method we are going to start tomorrow. What will happen in this method? Just come to know that you may be asked to what? You will be asked to show ledger accounts where you have to mention provision for depreciation account is not maintained and provision of depreciation account is maintained. There are two ways how we are going to solve this particular sum. Okay, in one particular sum, provision for depreciation account will not be maintained, and in the another sum, provision for depreciation account will be maintained. Okay, so two ways are there of solving that sum. So tomorrow we are going to teach you this method. Okay, one method is, see, when provision for depreciation account is not maintained, you will remember that when it is not maintained, you are going to do only one account. Okay, one account where you will do plant account and the entire sum will be over here. Okay, and the second method, when it will be provision for depreciation account will be maintained, then you are going to do two account. One will be the plant account. Okay, and another provision for depreciation account. Okay, now what is the basic difference between these two methods? Just keep in mind, when you are not maintaining provision for depreciation account, when you are not maintaining, you will remember that you are going to show depreciation in that same plant account as you have done till now. Okay, and in the second method which we are going to do, where you are opening a separate provision for depreciation account, in that only plant account you are going to write the balance of the machinery. Okay, no depreciation will come in this particular account. Why? Because we are opening a separate provision for depreciation account in the second place. Okay, so this is the difference between both the accounts. So tomorrow we will start with this method. Okay, and we will end the chapter tomorrow, and after this we will start another new chapter. Okay, so in case you have any difficulties, you can ask question. Okay, so we are ending over here our class today. Thank you, children.